Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me as always is Hiral Daria. Morning, Hiral.
Good morning, Alex.
As has been the case all through this week, in fact, you have another day where there are muted cues from overseas. But again, we've seen significant resilience in the Indian equity markets and particularly towards the latter half of the session where you see a recovery from the low point of the day, Hiral.
Absolutely. Last two sessions, that is Monday and yesterday, we've seen short covering that's actually happened in the last hour of trade. That's interesting. And as you're mentioning, there is resilience, but what's happening is at least your beginning of the day is slightly turbulent. Like, for example, if you see Gift Nifty in today's session as well, it's indicating a downtick of almost around 70 points to come in there, right? So mornings are turbulent. Then we settle off somewhere during the day. It's really silent waters, and it's the last hour of trade where we actually see that short covering that starts creeping in.
And you see quite a change in the breadth as well. So early on in the session, you will notice that there are significantly more declines than advances. And even for the benchmark Nifty 50 yesterday, you saw even Stevens towards the end of the session. But there is pressure for the banking names. There is pressure for the metals in particular. Metals are getting a little bit wobbly on account of the China effect.
Absolutely. If you see in terms of metals, 2 consecutive sessions or 3 consecutive sessions where we've seen weakness, and metal index has been the top losing sector as well. And as you mentioned, that's clearly on the back of the worries with regards to a slackening demand in China goes. But apart from that, the anticipation is from here on as well that markets will continue to remain choppy as well in the near term, right? So that's going to be interesting to watch out for. Though there is a good amount of buying interest that is being generated at around 19,300 strike. And that's the price where you're seeing a build-up of open interest as well. So interesting to see that level. Now, Nifty has strong support at 19,250 to 19,300 kind of a zone. And the highest call OI is seen at 19,600, which is then followed by 19,500. Whereas on the put side, the highest open interest build-up is seen at 19,300 strike. So overall, that's the kind of range that we are watching out for in terms of Nifty 50. Now, if you see, Alex, in terms of Bank Nifty as well, it's clearly underperforming the Nifty in last couple of trading sessions, or probably you could even say in the last month or two, right? I mean, there has been no situation where Bank Nifty has managed to overall outperform Nifty 50. So that's an interesting trend that we have been picking up.
Despite the outperformance of the PSU pack.
Absolutely. It's the PSUs who are outperforming the private sector banks, but overall, Nifty itself, Bank Nifty itself is lagging behind. And there's support coming in at 43,400 to 43,500, whereas resistance is at around 44,600 to 44,800 levels. So it's going to be interesting to see because clearly, I think probably a couple of weeks ago, we were talking about Nifty scaling to 20,000. It's far away from there now. But the bounce back that could come in from lower levels, where everyone's talking about that probably towards Diwali is when we will see those kind of levels hitting in. So it's going to be a slow and steady race to those levels now.
No, because especially if you think about it, what are the triggers that could, push the Bank Nifty one way or the other? Earnings season is out of the picture, and possibly you could look to global factors and FII flows because the banking sector remains such a favorite of quite a large number of foreign institutional investors. If there is turmoil in the global markets, you could see selling further, and that could be a bit of a dampener. On the other side, you could argue that the Indian equity markets and India as a whole is looking far better than a lot of other emerging markets and as a growth market compared to China as well. So you could see a migration of flows from
that could happen, but still in terms of valuations, we are still at the expensive end, right? So how does that transition actually happen in terms of funds moving into the country is going to be interesting to watch out for. However, one sector, Alex, we should be watching out for is the pharma pack. The kind of up move that we've seen in terms of pharma, it's interesting to see that last couple of trading sessions, there's some amount of profit booking that has started to come in. A couple of conversations with technical analysts are also indicating to me that there will be some bit of pain for a few more days in terms of pharma. till the cycle again picks up. So that's going to be interesting. But a lot of newsmakers that are in the offing today, I think Mika is, standing by with more in terms of what are the tongue twisters that she's going to talk to us about.
Yes, so good morning.
Right.
So we have quite a few approvals and orders from the US FDA. So first we have Cipla, which has received an order from the FDA regarding the suspension of a license issued to its Patal Ganga manufacturing unit. The unit manufactures both active pharmaceutical ingredients and formulation, and was given a license for a period of 10 days in December 2023. The suspension was based on the non-agreement of FDA rulings. The company is in the process of appealing the said order to the state government and has indicated no material impact on financials and operations due to the order. Next, we have Aurobindo Pharma. Its subsidiary UGR Pharma Specialties has received a US FDA approval for the icatibant injection. The medication is used for the treatment of acute attacks in the hereditary angioedema in adults. The product is to launch in September 2023 and has an estimated market size of around $137 million according to IQVIA. The company has also announced a tentative US FDA approval for its HIV triple combination product for children living with HIV in low and middle income countries. The product is to be launched under the voluntary license from Viv Healthcare. Viv Healthcare is basically an HIV company established by GSK and Pfizer that delivers treatments for people living and at risk for acquiring HIV. So the license enables Aurobindo to develop and supply the product in 123 low and middle income countries, including India. The company has capacities in the FDA approval plan to meet the market demand for this product, and the commercial production will commence in Q3 FY 2024. A little bit of the stock performance, Aurobindo is up 18.73% in the past month and 84.84% in the past 6 months. And the shares of the company closed at rupees 874.85 in trade yesterday. And lastly, we have Lupin, which has received the US FDA approval for 2 of its ANDAs. The first approval received for its Bromfenac ophthalmic solution. The medicine is used to treat pain or swelling of the eye following cataract surgery. The drug has an estimated annual sales of $11 million in the US according to IQVIA, and the product is going to be manufactured in the Pithampur facility of Lupin. The second drug that received approval is its Petoprolol succinate extended release tablets. The drug is used to lower blood pressure in hypertensive patients and has an estimated annual sales of $305 million in the US. The product will also be manufactured in the Pithampur facility. The company has also announced the launch of its tiotropium bromide inhalation powder in the US. The drug is used for the treatment of chronic obstructive pulmonary disease, and this disease affects 15 million people in the 15 million adults in the US and is also ranked as the fourth leading cause of death in the country. The drug has an estimated annual sales of $1,264 million in the US. Lupin has also announced the launch of its patient support program JEEP, dedicated to heart health. The Independence Day initiative will offer various benefits, including savings on medical costs, disease counseling, medical reminders, and lifestyle support.
All right. Thanks so much, Mika, for those updates. By the way, I caught Mika practicing all of these names just before we went on air. So that's what it takes, guys.
And it's going to be interesting as well to see how they pick up these names going ahead. But Lupin catches my eye on this, Alex, because the number of approvals and the combined market size is absolute good enough for them. So I think some positive reaction can be expected there. And Aurobindo is interesting as well because that's always been a silent horse in the pharma pack. It's the last to run this time. The stock is nearly almost doubled. And an interesting move there, but whether it has potential to move from here on from a valuation perspective is something we need to wait and watch and see. But that's an interesting name to watch out
I'm actually curious to have a broader conversation on pharma, and I think we should slot that in the coming days. But for now, let's turn to another stock that is in focus, and Amara Raja Batteries is the one that we're talking about. You saw yesterday a significant update from the center. There was an approval that was given for a plan to launch several electric buses across the length and breadth of the country in the bid to go green with regard to mobility. But the latest update from Amara Raja Batteries talks about its plan to increase its international sales as a percentage of its total volumes or its total top line. And Vikas is joining in to give us some perspective on that. Vikas, good morning. What are the latest updates that you're picking up from Amara Raja?
Yeah, good morning, Alex. So recently I met the management of Amara Raja at the launch of Innovation Center in Hyderabad. So there I got to know from the company that although the legacy business, they are making a diversification towards lithium-ion batteries, and they are investing around 9,500 crore rupees towards this facility that is coming up in Mehboob Nagar in Telangana, as well as this innovation center that they are setting up. The company basically also feels that this legacy business will at least take a decade before it starts to saturate and taper towards EV, where this lithium-ion batteries mostly will be used. So as of now, what the company is saying is that they are planning to expand their business to other geographies, especially in US, Latin America, Europe, and Africa, apart from the APAC region that they are present in and Southeast Asia, apart from India. So almost 30 million batteries that they are producing right now of lead acid batteries. They are planning to increase the sales to international businesses and locations by almost 50%. They are planning to take the sale to 50% of the total sales, which is as of now around 13.3%. So this they are planning to do over the next 5 to 6 years. But apart from that, meanwhile, they have also this transition phase which is going on. They are planning to fund through internal accruals in the first phase, almost around 2,000 crore that they plan to invest on. And the lab and the innovation center which is coming up in Hyderabad that they are planning to initially use only for captive purpose, but then slowly it will be open up for other common purposes also, where they will be testing on the various lithium chemistries as well as other batteries and metals like aluminum and copper. And they feel that initial after this commissioning will start, the company will see almost 30 to 40% of domestic value add, which will increase to almost 60 to 70% by 5 to 6 years, in next 5 to 6 years. So this is what the company is hoping for, and it's not willing to kind of give up its legacy business as of now. Back to you, Alex.
Right. Thank you so much for getting us the details. So clearly, if you go to see in the last 1 year as well, not a major, a 15 to 20% is the kind of move that we've seen on the company. Now, whether this actually helps them, be a wealth creator for investors or not is what we need to wait and watch. But moving on from the auto space, you have real estate that has been in focus as well. In fact, it has been good times for the sector. But let's see how Q1 has actually stacked up for all of these real estate players in the country. We have Saloni who's standing by to get us more. Saloni, good morning. How has the first quarter been for these real estate players basis what numbers have been announced?
Good morning, Hiral. Thank you for that. If you talk about real estate companies, they have reported mixed set of earnings for the quarter ended June. But that is when you talk about profit and revenues, that have missed estimates. But that is not what all that matters for the real estate companies. The numbers that one should be analyzing is their pre-sales numbers, their guidance, and their cash flows that they are generating. And on that front, the companies have maintained strong pre-sales guidance for the financial year 2024, even if their launches were muted during the quarter one. The launches were muted on the account of certain issues in terms of approval as well as specific state-related changes in system in place. However, the momentum is expected to improve in the second half. When we talk about the cash flows as well, the likes of DLF, Macrotech, and Prestige have also been generating and improve in the numbers. Now, we also track the debt levels of these companies, which was a cause of concern earlier. While DLF and Brigade Enterprises have seen significant reduction in their debt levels, Macrotech and Godrej during the quarter saw a marginal uptick because of their big investments in the business development space, where they have also been guiding pretty strong. And if you notice, these real estate stocks in the last month have declined or remained flat in the last month because of the earnings season reacting to the news. However, we spoke to a few analysts to understand the Q1 numbers and to understand what they see and how the outlook looks. And they see that the outlook actually remains healthy because they see the industry going through a consolidation phase, and they also remain strong on the second half of the financial year based on the launch pipeline, and also expect these companies to meet their guidance.
All right. So that's an interesting take. Thank you so much, Saloni, for joining in and for giving us that perspective. Interesting pack to watch, certainly, ahead of the festive season to see whether or not that consumption picks up. in terms of the real estate players.
And you know what's interesting is in the last couple of weeks, when I've been talking to analysts as well, Alex, with regards to post earnings, specifically with real estate players, the bias is towards Bangalore-based real estate companies. So that's an interesting trend where names like your Brigade Enterprises, Sobha, Prestige, that's where their loyalties are as of now.
So if you think about it, that would make sense because of affordability. One, because you have such a large percentage of the IT workforce there. There is the ability to buy higher ticket size apartments. And perhaps we'll need to go into a deeper analysis as to how the increments have been across the board here in India. And maybe that will have a bearing because interest rates have not started declining despite the fact that yields have started going down.
Yeah.
So they are at very elevated levels. When you're thinking of getting a new home, maybe you will think, I'll wait for a year. And that pushing forward of purchases of houses might also be something of a factor that these analysts are looking at. Another conversation that we should soon have. In the meanwhile, let's talk about a few other stocks that you need to watch out for on account of them being in the news. And we've got Saloni joining in. Saloni, number 2 for today. Morning, Saloni. What are you picking up today?
Good morning, Alex. So first we've got Nawa, which was formerly known as Nawa Bharat Ventures. So yesterday, the company said that it has temporarily suspended the production of silico-manganese at its Odisha plant. So the ferroy alloys plant in Odisha suffered accidental damage in the raw materials handling system, thereby affecting the raw materials feeding system and other supporting infrastructure. Currently, the Odisha ferroy alloy plant is producing about 4,000 metric tons of silico-manganese per month. Consequent to this accident, the captive consumption of power of about 20 megawatts from the captive power plant at the Odisha unit has also been affected. The company estimates that the full resumption of production and captive consumption of power at their Odisha plant will require about 2 months. Then we've got Power Grid Corporation of India. So the company, which is a Maharatna Central Public Sector undertaking and India's largest electric power transmission company, received notification for commercial operations yesterday for its assets under the Northeastern Region Strengthening Scheme 6. Then we have an HSBC report on Brookfield India Real Estate Trust. So the brokerage maintains its buy rating on the company, but decreases the target price from rupees 325 to rupees 315 as HSBC incorporates new acquisitions and adjusts the cost of capital. After a tough QIP where the company raised rupees 2,300 crores against a target of rupees 3,400 crores, Brookfield has now almost completed its major acquisitions with procedural formalities pending. Since the company issued new units before distribution, the DPU, which is defects per unit, for the first quarter got further diluted by 27%. The company continues to struggle with its SEZ portfolio, which has become unattractive in the eyes of the tenants post the removal of tax benefits. The company is likely to be the monetization vehicle for all the under construction assets of the group and is likely to have low under construction risk. The downside risks, according to the brokerage, include an increase in lease expiries and additional delays in leasing.
Right. Thank you for getting us the details. In fact, we were just talking about the real estate space as well. So this is going to be an interesting aspect to watch out for. Thank you, Saloni, for getting us these details.
This is more commercial than residential.
Absolutely. This is more commercial than residential. And there is a wide gap in terms of demand for real estate in terms of residential versus commercial as well. But moving on, a lot of companies that are back with bulk and block deals. Yesterday was a heavy day on that front. In fact, Himansh has been tracking all of that. Himansh, how have the stocks reacted in terms of the blocks and bulks, and which were the major ones where you saw good buyers and sellers?
Right. So a bunch of block deals took place yesterday, both during and post-market hours. So following up on Tuesday's headlines, where Interglobe Aviation promoters offered up to 4% stake in the business, the promoter, Shobha Gangwal, has sold 1.15 crore shares for about which represents 2.98% stake in the company. Now, these were sold in 3 tranches, and with the price ranging from 2,426 to 2,427 a piece. And then the stock was down over 3.47% in trade yesterday. Then we have JSW Energy, where the promoter entity of JSW Investments sold 1.3% stake of 2.1 crore shares at rupees 341.7 a piece. Now, the total value of this selling transaction was up to 717 crores. On the other side, we had GQG Partners buying 1.7 crore shares, which sums about 1% stake, aggregating for a sum of 571 crores. Then Adani Power saw paired its stake to GQG Partners, who bought 15.2 crore shares, representing 3.9% stake in the business. Promoter entities Worldwide Emerging Market Holding and Afro Asia Trade and Investments sold 4.6 crore and 26.5 crore shares respectively, and the collective stake totaled up to 8.1%. The deal for this Adani Power does bring in a sense of confidence after the company also saw Qatar Investment Authority's 2.7% stake purchase in the Adani Green business last month. It is also a step in the right direction as institutional money flows into the business, bringing more transparency. Then Religare Enterprises was up 6.3% on account of the Berman family, the promoters of the Dabur Group, acquiring 7.5% stake in the business. The shares were acquired at an average price of about 218 apiece, and the total transaction value came up to about 534 crores. As per Bloomberg reports, they already own 14% in Religare Enterprises through various entities, and the bulk deals yesterday were executed through Puran Associates, VIC Enterprises, and MB Finmart. Lastly, we have IIFL Securities, where Fairfax Group's affiliates offloaded about 5.9% stake in the business, and the transaction sized about 118 crores. Now, Fairfax shareholding fell from 9.28% yesterday to 3.38%. On the buyer's side, we have Thelme India Masters Fund and Zafar Ahmedullah buying 80 and 40 lakh shares respectively on the on the National Stock Exchange, while on the Bombay Stock Exchange 32 odd crore lakh shares were sold. So shares of IIFL Securities were up over 7% in trade yesterday. So these are all the bulk deals to watch out for in trade today.
Thanks so much, Hemant, for those updates. And we have been seeing quite a bit of action. That one large stake sale in Adani Power is the largest buy-sell number that we've seen in history, apparently. That's a very large number that has gotten recorded. The next piece that we have is also quite interesting from the perspective of stocks that you hold in your portfolio that give you a good dividend yield. And these are very important, of course, in the larger mix if you think about the portfolio that you build, because these are the regular run rate generators for you.
I mean, they will not give you,
stellar capital
returns
gains.
Exactly, but from a dividend perspective, that's the major reason why people hold them.
An interesting perspective, right? Because one of the stocks on the list, NMDC, we spoke to the management not too long back, and the management was talking about the fact that large capex is planned over the next 5-6 years or so. And this is a very large dividend paying company as well. So the question that we asked is, how are you going to manage the two? And the management was quite confident that they won't have to raise debt. They're going to be using internal accruals, but whether or not that has a bearing on the dividend paying is to be seen. For now, though, it makes the list. So that's interesting to talk about. But of course, talking about a list of companies that will be paying a significant amount of dividend over the coming month. And Rishi is joining in to give you some perspective on that. Rishi, good morning.
Good morning.
What's on your list today?
So, regards to the dividends payment that are expected within the next month, it is also interesting to look at the kind of companies that are actually paying these high dividends. So, among the top 5, we have Bolmer Lorry Investments, which is the government-owned small-cap parent company, as well as its subsidiary company, which is into lubricating greases. Now, the parent is expected to pay a dividend of 33 rupees per share, and it also has the highest dividend of 7.6% with regards to yesterday's closing. Now, the subsidiary, that is Bolmer Lorry Company, on the other hand, is expected to pay 7.5 rupees per share of dividend, with its next highest dividend yield of 5.1%. Now, following this, we have Banco Products and Nirlon with 2.8 and 2.7%, which are again from the small cap space. Followed by this, we have the mid-cap space. In the mid-cap space, we have NMDC that was mentioned earlier with a yield of 2.4% with regards to yesterday's closing. Now, in absolute terms, if you look at the dividend that is being paid per share, there's also ICICI Securities with a dividend of 9.25 rupees per share that is expected within the coming month. Now, among the large caps, the notable ones would be Coal India, which is paying 4 rupees per share and has a yield of 1.7%. With regards to yesterday's closing, Coal India also has a very good track record of paying dividends. In fact, its 5-year average is 56.3 rupees per share. So clearly, it is the small cap stocks that are beating the large caps as well as mid caps with regards to the dividend payouts. And even if you look at the yields with respect to yesterday's closing, so that's something that's really interesting.
Thanks, Rishi, for getting us the details. So I think these are going to be interesting names to watch out for from a dividend perspective. But Alex, few names I want to highlight today is in terms of IRFC, but the government has announced an OFS as well in terms of FY24. So probably you could see some bit of an action that could continue in today's session on that one. Aarti Drugs as well, where the buyback issue tender actually closes today. So let's see how that stock reacts in trade. So let's watch out for these two names. And clearly what we are seeing right now is a day of stock specific action that continues, and a lot of sectors, rotation is something that could be anticipated as well, but clearly no major movement, and it is weekly expiry as well, right? So there could be some amount of volatility that could creep in today's session.
Certainly, and we'll touch base with you, I think, tomorrow to kind of understand what the implications are of that. For now, though, that brings us to the end of this edition of Trade Talk. It's been an absolute pleasure bringing it to you. Do remember to check in over the course of the day on our social media platforms, as well as the website bqprime.com for all the latest on the markets and the world of business. Thanks for watching. This is BQ Prime.